right, guys, we're going to get into the big number, and it's not how many burgers Kenny Glick is going to cook for us on Sunday after he becomes a billionaire. We're talking trillion, everyone. It's 1.5 trillion. That's how much homeowners have lost in equity since May of this year as home prices continue to drop after surging throughout the pandemic. Now, pay attention. Overall, the home prices for September, they're up 41% year over year, but did not show us much of an increase compared to July and August of this year. So, Garrett, with home prices continuing to drop, is the market just correcting itself from the pandemic, or is there something to be really concerned about? You would know.
Do you want me to lie to you and tell you everything's okay? I can do that. Powerball was canceled because of security protocols, and they're going to do this under independent audit, and they're also going to have additional security people. I think they should do that. You're talking about $2 billion on the line here. With that in regard, I paid very close attention to what is said by Moody's Analytics chief economist Mark Zandi, who had effectively said that they were overvalued by about 25% housing heading into this pandemic reversal. And the affected expectation is that we would see the largest downturn in housing prices or correction since World War II. We were a world where we created 40% of our all money in existence in the last 2 years. So what did you expect? You had lots of assets that were overvalued. You had cryptocurrency now is pulled back 70%. You have the S&P 500. Housing is an asset. It's an illiquid asset. You raise interest rates, you make affordability more complicated. The prediction from Goldman Sachs is that housing will reach its bottom at around mid-2024. I'm not that pessimistic. I would say it's probably going to reach that course by the end of 2023.
Okay. Well, Garrett, it's rare to hear you less pessimistic about something, so I'll be on your side with that. And it's funny, someone in the chat just said the Russians won the Powerball. The Russians won the money. That's why we have that getting locked down and loaded. Shah, you're up on the housing market with trades and retail and commercial properties. What major indices are you keeping an eye on with continued decline?
Well, commercial, we're looking at a lot of REITs, but as far as mortgages, which is really the impact that we're going to see vis-a-vis the retail side, the residential side, I'm following MBB, that's the symbol for this, the MBS iShares ETF. We're putting trades on in that. It's heading down. It's been heading down, and I think it's got lower to go. But that's really a good reference as to how the residential mortgage market is. Now, most of these mortgages are held in government entities and backed by the government one way or another, but doesn't mean the prices of mortgages can't go down. And MBS prices have been going down. They've been saved lately since September by the Fed, who's actually been buying mortgage backs. When they're supposed to be doing quantitative tightening to stabilize that market. That's an indication that there's weakness there. So that's the thing to watch is MBB. That's my benchmark.
MBB, Mary Betty Betty. Is that the ticker symbol? Mary Betty Betty. All right, guys. Yeah, we have some people in the chat asking about that one. But Shah, how might falling housing prices impact commodities?
Well, it's already impacting lumber. Lumber is taking it on the chin, and it was about 1,700 plus during the height of the building spree after the pandemic subsided and people getting out and building and moving, et cetera. And it was 1,700 a linear foot board, and now I think it's like 444 last I looked, thereabouts in the January contract. So that's taking a hit. It's going to be a spillover in terms of everything from washing machines and to steel. It's going to be a problem for a lot of areas that are impacted. And commodities are starting to show a little bit of a weakness here. I think it's a buying opportunity, but the housing and I think slowing. The problem we're having is we don't have enough houses, and there's going to be building again at some point. But with mortgages up here, now's not the time, and obviously the home builders are getting hit too.
And maybe that just gets into a collective where Garrett is also seeing that we'll pick up sooner than what Goldman thinks anyway.